Nord Stream 2 was hanging by a thread anyway. Does it make any difference that Scholz has essentially sidelined this product?
To us, not really this year, especially because it was going to be maybe operational in the second half of the year. And then we're already facing compliant capacity restraints from the EU. So at least in the near term, I think that this move is not going to have a huge impact on European gas markets.
Talk to us a little bit about what the perhaps alternatives are when it comes to the European gas market. I think you had Dmitry Medvedev, the former prime minister of Russia, come out and say something along the lines of simply that if this does go through, the idea that Nord Stream 2 would essentially be paused, that there would be some very severe consequences when it comes to pricing for European gas. To what extent is that true?
It seems he was a little bit aggressive in the pricing, at least in my view, for now, because we have LNG coming to the continent, at least in increase right now in LNG, as you can see, and cargoes coming especially to Northwest Europe, which is Gazprom's kind of home market. But Gazprom also has all the other pipelines that it's built and currently uses that are in operation. And we've seen since 2018, when they had a record export year of 200 BCM, that they can export as much gas as they can produce and that Europe needs if they want to. So I think the bigger question for us right now is if these current export levels are going to remain. We've seen a sharp decrease since the start of the year in exports. We've seen no exports through Yamal Europe into Germany, which is for the pipeline that goes through Poland. So if that remains, then obviously prices will continue to remain really high. We've seen gas kind of tick up in the last couple of days, or in the last day, based on probably this news, but it's been a really volatile market.
It certainly has been volatile. Do we have a clear sense of where prices could end up if we get a full-blown escalation, if we get that most aggressive package of sanctions from the US and its NATO allies and the response from Russia? Is there any clarity on that?
I think not really, although we kind of view that the EU doesn't want to touch gas as much. They've talked about future gas projects just once or twice, but it seems like for now they want to keep the energy flowing. So we might see something temporarily like what we saw in December when the TTF gas price, which is kind of the price that we use for Gazprom prices, reached record highs. Like we've never seen anything before that, but they're down significantly since that level. So probably we'll see some rebound in the near term, especially if things escalate. But I think as a whole, it seems like for now that the gas will keep flowing. And I would mention that President Putin this morning said that Gazprom will continue, or Russia will continue to export gas to the world markets uninterrupted. So at least for now, that's the narrative they're sticking to.
Mitch, let's talk about the oil side of things, because if you look at kind of Russia's ability to ramp up capacity, well, they actually haven't been able to in the way that perhaps some of their OPEC plus peers have. Saudi Arabia, the UAE are the people that I'm thinking about specifically when it comes to meeting those OPEC plus compliance kind of targets. Talk to us a little bit about how much these tensions really matter in the face of the fact that perhaps Russia was already behind to begin with.
Yeah, I think the oil market story is a little bit different than the gas, because the gas market is at this point, the volumes are significantly down. Whereas with oil, we saw the three largest producers, or three of the largest producers, say late last year that they were already out of spare capacity. So now we're seeing a ramp up in drilling and investment for this year, but it's going to take time for the oil to reach the market. And they might be able to meet their full OPEC plus requirements in March. But then after that, the question is how much more expansion can they get? And I think general consensus is that it won't go too much higher in the near term. But for oil, it feels a little bit of a different story. It's not so maybe political, or they don't have an export monopoly with one company just only exporting. So therefore, it's a little bit still more of a trade situation.
Yeah, Mitch, the Iranian story has been rumbling on in the background of all of this and has been slightly overlooked given what's happening on the border with Ukraine. But you've had some commentary suggesting that progress is being made and that Iranian oil could be back on the market as soon as the second half of this year. Is that being priced in?
I think it's been more of an excuse the last few weeks. So when we see oil kind of ticking down and you're looking for a reason why you have kind of intra-week movement, the progress on the Iran deal is there. But I think at this point right now, we saw $99 oil, I think earlier today, or 98. This levels are more related to the geopolitical tensions. But in my mind, there isn't a lot of threat, at least for now. The situation is very fluid, so it obviously changes moment by moment, that there will be a disruption of oil flows from Russia.
Mitch, I'm curious about, I mean, you just heard Tom talk about Iran perhaps, but let's talk about the fact that you are nearing Brent and WTI getting closer and closer to that $100 per barrel number. A lot of people say that that's really where the demand destruction kind of starts. Talk to us about the significance about the $100 level when you already have, say, in the options market, prices already getting forecasted to, say, 125, 150. Those bets are being made. How significant is the $100 level?
Yeah, I think psychologically it's something that we've seen forecasts and we've seen people call for it, and then it's hard to get to. And I think also it kind of always signals this idea that you could bring back production that's really much more expensive. So for Russia, it would be offshore Arctic, deep water, which of course sectoral sanctions limit, so that they would have to do that alone. But also we're seeing more headlines on shale. So even though I'm primarily focused on Russia, we're still trying to understand kind of what's going on in the shale patch in the U.S. and how much oil that will bring onto the market. And obviously these higher oil prices, it's kind of a balance, especially for OPEC, because that could kind of spoil their party, because they've had control for the last year or two of kind of what prices and output looked like globally.